Welcome to the Underwriting Intelligence Podcast. I'm Amrit and the co-founder and CEO of Hyper Exponential, and I'm very excited to introduce Mark Geoghegan. Mark, how are you today?
Very well, very well. I mean, the sun's shining. I mean, it is January in London, and sometimes it feels like the world's about to end. Half of the UK is underwater or being battered by gales and sort of, shutting down train lines and all that kind of stuff. So I just think, anytime the sun does come out, it reminds you that it's there, and we need to make the most of it.
And the market's just recovered, irrespective of conditions, from a swathe of 1-1s as well. So the metaphorical sun is coming out on the other side of it too.
Well, I don't know about that. I mean, certainly feels like we just got to the top of a roller coaster ride, and it's
true.
That moment when your stomach sort of is somewhere near the top of your eyeballs, where you're thinking, oh, you haven't even had time to scream yet. That moment was sort of at that moment because, anyway, we're not here to talk about the state of the market, are we?
No. We're here to talk about you and your journey. So maybe if you could give us a little bit of your background, and I'd love to dive a bit deeper on it, actually.
Well, I suppose if we start sort of at university, I went to university to study Spanish. I'd done French and Spanish A-level. I'd always liked languages. I did a bit of maths as well, which I suppose maybe comes in a bit later. Those were my A-levels. I went to study Spanish, where I added a bit of Portuguese there. And then when I came out, I really wanted a job where I could speak Spanish. It's pretty simple. And that made me discover the insurance industry. The weirdest thing was, I worked for the biggest broker in Spain, and it had a London office, and it was one of the first foreign-owned broking groups to become a Lloyd's broker, because before it was a bit of a closed shop. You used to have to buy a Lloyd's broker, whereas it was the first one under freedom of services of the EU to become a Lloyd's broker organically through jumping all the regulatory hoops and doing it sort of the old-fashioned way. Yeah, I mean, my first day down Lime Street, I bumped into 2 people off my course because they were just hoovering up people who could speak Spanish. Which was great. So it was one of those things that I didn't really know anything about insurance, but I just knew that, well, there's obviously this is a very international world, and they want Spanish speakers. But I did have this other thing I'd always wanted to do, but done nothing about because I was too lazy. Or sometimes it's not too lazy, it's just that you don't really know how to do it. Was this idea of, I always thought, well, writing or journalism would be really interesting. I always enjoyed films about journalists, and I thought that it was cool. It would be cool to be a journalist. I suppose that's the most important thing. But those two things are effectively in conflict with each other, because I wanted a bilingual job, and then to go for a bilingual job in journalism from day one, I think it's sort of, well, how could I do that? I would have to get a job at Reuters in Madrid, but how would I even start to get that job? And you also know the things that your parents tell you are, well, Mark, why don't you be an accountant? And 2, why don't you not be a journalist? Because obviously everyone knows that journalists don't get paid anything. That's a badly paid job where you'll be scrabbling away and have to live in a garret and not have any central heating.
Well, you're talking to an ethnically Sri Lankan actuary, so I'm totally with you there.
You know what I mean? You know exactly what I mean.
I do.
That's sort of things that you think do affect you, and you think, well, okay, well, I quite like this. I mean, this is quite well paid, this insurance business. And also, I got a lot out of it. So I got to go and live in Madrid and then come back to London. And that's when Aon took us over. And Aon Spain is effectively this Spanish broker called Gil y Carvajal. I mean, then Aon's sort of is always going to be the biggest broker in Spain because of that move. It was a very big, it was a dominant position in the Spanish market. And then that was the chance for me to say, well, hang on a minute, I can really I was getting married, was getting a mortgage, all that kind of grown up stuff. I was turning 30. I'd done seven years in the insurance market in London and in Madrid. And I thought, well, this is the chance. If I don't take, there's sort of redundancy on offer. I thought, well, why don't I take it? Because then, and my wife said, yeah, I'll support you. So it was easy to do then. And that was the point when I started to try and become a journalist writer. And it was a bit easier, I suppose, when you're 30 than it is when you're 21. It just feels like it's just, you just sort of have to make a plan and get on with it. And I was lucky because a friend of mine had pursued that side of his career. He was now the deputy, by the time he's 30, he was the deputy editor of a dance music magazine. And obviously it was all popular culture, so they had to do film reviews. But film reviews are it's cool, but it is a whole day's work because you have to go and see the film. So you have to go into Soho to some screening room. You have to sort of sit, watch a film all the way through, obviously, because you can't review. Pretty hard to review it otherwise. You can get back on the tube, go home, and write 500 words about it. That's going to take you all day, basically. So it's hard for a small magazine with a very small staff to do that. So I got a couple of freelance gigs to do that. I got paid £25 for my second one. I did the first one for free, and they liked it. They said, "Well, we really ought to pay you." And so 25 quid. But that was great because I had a byline, which is basically, it means, article had my name at the bottom of the article. And so I knew it was by me, and therefore I could apply to jobs with a load of cuttings. And they were just photocopies of a physical magazine back in those days, because it was still late 90s, early just 2000s. And then I got a job on a magazine called Webspace. It was all about that burgeoning internet. It was about doing business on the internet, but it was a proper old-fashioned magazine. It was you could buy it on W.H. Smith. It was a proper glossy magazine, came out every month, and it was good. And because I was a bit older than everyone else, as it was a sort of place, it was an entry-level sort of place where people do a couple of years, and then they go to a bigger publisher and get a better job and get better pay. So by dint of just sort of staying there and because I'd been an insurance broker, reinsurance broker, I was the sort of person that the publisher could take out when we were taking our top advertisers out to lunch. I could sort of go along because I used to do that partly for a living. So I didn't really put a foot wrong in that sense of being good on the commercial side. Being obviously a lot of editorial businesses, you have the editorial and the commercial side don't really talk to each other because the editorial think it's all a bit above them, and they hold their nose and they live in this ivory tower where they want to sort of have nothing to do with they want to be sullied by the money side of things, as if it would corrupt them. They want to keep their independence, but in the end, there's nothing worse than being on a failing magazine when there's no money for anybody and you don't get paid. This was very much at the entry level where we didn't get paid. We used to get paid on the last Friday of the month, but it was always by check, and it was after the bank had closed.
That's a good
catch
tactic,
it until
isn't
the
it?
Monday.
Yeah.
And every invoice used to go straight to the factorers, the sort of Singer and Freelanders, and it was just
Right.
faxed over. As soon as you sold something for £1,000, you sent it to Singer and Freelander, and they would give you £80. They give you 800 quid, and go and collect the money on your behalf, because everything was sort of hand to mouth. It was a really good education, actually. But so I became the editor after about a year because everyone else had left. So I just, because I sort of had that maturity, I was just
A crash course.
I was 30. I was just seemed a bit older, more presentable than the other people.
It's fascinating. It's a crash course, really, in journalism. I'm so interested in, many unique careers have kind of these fortuitous moments, right? That way. So I'm super interested in how you circled around into the Insider, because you left, actually. So you did insurance, then you did journalism. It wasn't insurance journalism, right?
No. It was nothing to do with it. So
Yeah,
it was
yeah.
5 years. I got into investment journalism after that because there was the dot-com crash. That Webspace magazine, all the biggest advertisers, which were mostly the hosting companies, people who would sell you a domain name, or domain name registrars and hosts, they would they just pulled their advertising. Suddenly we didn't have a magazine, and that was a good lesson. It was like, if you don't have a commercial audience, you don't have a magazine, you can't make a living.
No.
And then I worked on the Newswire, which was published on Bloomberg, a Latin American newswire that was just a sort of maternity contract, and then investment magazines. That was really interesting. They were really good, and I learned a lot about marketing from them. That was things like the Red Hot Penny Shares, which was like these were all share tipping newsletters, and there was one called the Fleet Street Letter that was well known. And I learned a lot. They were really good at marketing. They taught me a lot about direct marketing and the way that you talk to people, and the way that the weird thing is that the editorial had to actually follow up what the marketing message was. So people would be got onto these newsletters via direct mail, and they'd have these sort of 20-page stories about how the world's going to end and you need to buy gold. And it seems very familiar with all this crypto stuff, actually.
I was going to say,
of course, the
yeah.
gold bug story. Gold was only $250 an ounce then. So yeah, they were right, by the way. So you should have bought gold.
Yes.
It's $4,000 now. So yeah, it's been one of the best investments of the last 20 years.
So how did you end up? How did the Insider pull you in? How did that happen?
It was so easy because I saw a job for editor of Reinsurance magazine, And I had this little discussion with myself about, that was just in early 2005. I'd been 5 years out of the insurance industry completely, having nothing to do with it, and not writing about it either. And I thought, I've got to a stage now, I've kind of cut my teeth in journalism and in publishing. So I thought, well, actually, I didn't leave insurance because I found insurance boring. I found doing the day-to-day insurance quite boring. But when you're the editor of a magazine, so, the difference. So I got a job as the editor of Reinsurance magazine as part of Incisive Media, which was part of the group which owns Post magazine. Now, I think it's just called Insurance Post and Insurance Age and those more sort of UK general insurance titles. So it was a great place to be because it was a good group of people who were all insurance people, insurance journalists. But I thought I won't be bored if I can write about everything to do with reinsurance in the whole world. Rather than having to do it. I mean, the death knell for me in insurance was that I like doing new things and interesting things, but if I had to renew it, it suddenly becomes uninteresting. It's like having to sell the same house every year. If you're an estate agent, you go, oh, I've sold number 12, number 12 Gladstone Road. It's like, why would I have to sell it again every year? It's really boring. I do know everything about that one now. And it's kind of like, I would like to do something new. And the great thing, obviously, the definition of journalism is something better be new and interesting. Otherwise, why would you write about it? So if it's the same thing happened last year, that you're never going to see a headline that says "same thing happens as happened last year." It's never going to happen. So, it's eternally interesting, and suddenly you're at a different level. You're talking to the bosses, and you think, "Oh God, you've got to fit this whole industry together. How does it actually work?" When you've got your head down and you just got 5 renewals that month, and you're just scrambling to get them all done. And to make sure you retain those accounts and make sure everyone's happy, and maybe win something else that you're quoting, your head's down. You don't know why, why is that Lloyd's syndicate cheaper than that other Lloyd's syndicate? You don't have to know. You just go and do it. You just find out who's cheaper and do it. You don't have to go, oh, well, actually, this one's got a lower cost of capital than that one. Why is that? Oh, because it's better diversified. It was like all this suddenly grown up stuff. You have to think, oh, why is that? And instead of, as a broker, I never went to Monte Carlo. I hadn't got to that level of seniority and probably never would. But suddenly as an editor of a reinsurance magazine, you have to go and you have to interview all the CEOs. And the suddenly is, what are they worried about? They're worried about their cost of capital. They're worried about their return on equity, they're worried about their diversification. They're worried about et cetera, their peer group. And it's like, wow. So suddenly it's eternally more interesting. And there was the classic thing when I was ever interviewing a reporter to join, it was, I knew that part of my job was to make that reporter think that insurance was interesting, because I knew that they would automatically walk in assuming that insurance was really boring, and therefore that a part of my job was, in interviewing them, was to get them excited about insurance. So I would kind of pin them down and say, right, look, guys, you'll be surprised how interesting insurance is, because of course it's connected to every single thing in the world. It's money. It's but it's everything that's on 7 o'clock news you can write about tomorrow. Anything that happens, you can write about it. And so it's connected to all that stuff. So it is eternally interesting. So it's great. So once you found it, then you can stick at it, and then you can invest your time in understanding it, because it'll still be there in 15 years' time.
And can we dive into that? Because, when I look at your journey, and, I started in the market in the mid 2000s, just after KRW. And one of my ways of learning a lot was to read your articles and the articles in the Insider. And one of the things that I was just knowing your journey now, I can see how you brought a market-based understanding into your journalism. But I'm assuming that not all the reporters that worked for you or worked in the team came from the market.
No. So almost none of them, no.
So you have to imbue that in them.
Yeah. But the interesting thing is that actually Peter Hasty, he's the real father of the Insurance Insider, of what you can see as the Insurance Insider. He had that vision and really turned it into what it is. He had worked at Lloyd's, but not really, more on the debt collection side. It was for a short time. And we had the founding editor of Treading Risk, which is now Insurance Insider ILS, was an underwriter, Rebecca Boll. She had been a financial institutions D&O underwriter, and she founded Insurance Insider ILS. She's actually still in the market, serving the market, working at Cybercube. So, but I mean, when I was sitting in that as editor of Reinsurance Magazine, obviously you scan the horizon for your competitors and who else is out there, and you meet those people down at Monte Carlo. You've got to go to big press conferences where all the journalists are there sitting there furiously taking notes, and you've got all the insurance journalists in one room listening to, to a big CEO or whatever. You see what other people are writing and how they're writing it, and being someone who'd worked in the market, you could see the insider was the only one that had the language that really understood, that spoke in the right language. They would talk about, oh, that's a big stretch, or, suddenly they would throw in little bits that only someone who works in insurance would use, little slang, the sort of insurance slang. So it immediately draws you towards them. And then, after 3 years at Reinsurance Magazine, it became one of those things we were sort of dancing around and thought, you know what, the insider is the place where I would rather work. I think that we can really make this one rock, because everything about it was right. The office was on Lime Street. It was just it was in Asia House, which was anyone who'd been a broker had been in Asia House, to go and see. There are lots of small MGAs in Asia House, and some of the stories that we're writing about different things that interesting historical stories that were sort of ending up in court cases 12 years later, were actually, some of that business was actually transacted in the same building. One of them was even transacted in the same office that we were writing the stories about them in. So you couldn't be more embedded in the insurance and reinsurance world. It was amazing, So for me, it just felt absolutely. It was a bit of a no-brainer. It felt absolutely right, and it was right because it's done really well. And it was a good career move.
Yeah, and it does. The slang, the kind of the way you frame that is one of the key things, right? I think when you report in a way that's very relatable to the audience, they get drawn in, they engage in a very different way. You said something just before that, which I found really interesting, which is, we didn't talk about before, but I'm really interested to explore, because I feel this really clearly in my job now, right? Like, in the past, I was a coal-face pricing actuary, right? That was my job. I remember the 1/1 renewals. My manager would say, right, we've got 41 1/1s to do in the next month. Dust off the pizza menu. We're not going home, right? The things that mattered to me in the day-to-day were very different now to the things when I talk to a CEO and we're selling them our software, right? And I think there's something really interesting there about capturing the market mood, which is somewhat, it's connected, but not entirely to the day-to-day jobs. And I don't know when you're reporting or when you're doing the kind of engagements with the market, if that's something that you pick up on naturally or not. I don't know what your take on that is.
I suppose it's all the difference in, seeing the wood for the trees, isn't it? Someone has
exactly.
to get the drone out and actually tell you what the forest looks like, because you're too busy chopping down trees in front of you. Just what is in front. Yeah. Oh God, that horrible feeling. You reminded me of, God, and it was so awful that late, early 90s. I remember that moment. There was a moment about the right at the end of November. Suddenly, the fax machine was just going mad, and I mean fax machine.
Yes.
42-page submissions from, it was the bouquet or something, and then what even is this? Is this, are these numbers from the ground up or not? And it's like, will you ever get an answer to that before 1/1? Probably not. We just have to go on what we've got. It's just, I've got this blurry fax, and I'm going to put it in front of an underwriter, and hopefully they'll quote something. Right? And poor old Amrit is going to have to try and make some sense of this.
Muddle his way through.
Yeah. And I really feel for you, but I felt for all of us in that chain that it was just trying, and being the primary, being that broker sitting and having to try and make that into a presentation, this jumble of nonsense, and to actually make it look good enough for an underwriter to at least not throw it away when they saw it, to say, well, Mark, I can't quote this. It's absolute gibberish. It's like, well, I know it's gibberish, but it's very good business.
That's right, exactly. So find a way, right?
We'll find a way. We will find a way. We will just latch onto something and say, I think that means that. We'll have to make that assumption that it is ground up or not net of deductibles, or what I mean. I mean, it's just really, really basic stuff. It's just, at least now, I'm sure you still have those problems, but I'm sure you can sort them out.
I was going to say, Well, it's so interesting, right? You think about the technology challenges. One of the beautiful things about technology is it has a way of finding these inefficiencies and attempting to frack them out, right? Whether we succeed or not is a different matter. But I think it resonated with me when you were talking about the fax machine. I think, there's maybe not fax machines now, but if you think about some of the people you've had on your show, my friends from Cytora and other places who are trying to solve that submission flow, and HX is doing it now too, right? Dealing with the submission ingestion, wrangling the morass of information that comes from multiple channels at different points in time to make it useful. Yeah, some things, the more they change, the more they stay the same.
Oh God, yeah, but it's because of course a fax roll was very expensive, and
Mm,
and the thing used to run out. I mean, late November, early December, it just went.
yeah.
We had to change the roll every day at least. If you don't want to run out of that stuff, it was like gold. I mean, it probably cost like 20 quid a roll or something. Anyway, it was really expensive, and it would fade after a while anyway. So you had to photocopy it, so you could put it in the placing file. Because yeah, I mean, it was just complete. It really was paper madness.
Maybe we can fast forward to today because you decided to go it alone, and I'm love to hear about your motivations for doing that. The world is very different now. Substack is very popular. The internet has done wonderful things, I think, for like more niche corners of the internet in general, right? It's this beautiful matching system that's very kind of search based. You can find any voice really you want. There's probably, if any subject, there's probably a couple of people talking about it on a microphone,
Yeah.
right? Including this is a good example of that. But you did this, I think, probably just in the pre-Substack era, and you've probably lived it. And of course, you had the momentum coming out of the Insider. But I'm interested in what motivated you and kind of the advantages and
I
disadvantages.
sort of wanted to get back to that vibe that the Insider was quite a small business, and like all small businesses, it was great because we were in that little thing in Asia House, and it was sort of because we were all sitting in a room, and it was like an episode of Top Cat. It was sort of like, who's going to do this? I'll do that. You do that. I'll sub it. You write it.
Yes.
I'll write the
Yeah.
backstory, and we'll marry them all together at the end, and that'll be out. And it's like, is it out? Yes. We've hit the button. That alert. The Insider was all about those email alerts that you'd get on your
Yes.
BlackBerry.
Yes.
And
I remember.
and it was a big deal. You knew you were really making an impact. But like all these things, it just gets a bit bigger, and you become successful, and suddenly it's London, New York, and there's 40 of you, and then we became part of a media owning group, which was a FTSE 250 business, so we were bought, which is great and everything. But then the weird thing is being in that sort of position with your editor or director or whatever it is, you suddenly wake up and think, oh God, I'm a middle manager. And
It's a machine. It becomes a machine.
And you think, oh God, very, you have a sort of those moments of clarity when you finally sort of, again, you start to look at the wood for the trees, and you think, you sort of pull out and think, God, I wouldn't think probably wouldn't apply for this job. So why am I? Turns out I'm doing this job. I'm this middle manager, because now we're just one magazine in 150 magazines. I think we were one of the best. We're the best one, but we were performing well. But you get all that corporate stuff, and it is a bit grating, and this sort of thing. Suddenly, whereas before, you lost a reporter had resigned because it wasn't working out or whatever, and in the old days, you're just sitting in Asia House and you go, right, okay, bang, go to journalism.co.uk, put a new advert up. And it would be sort of, have you done it yet? And are there any CVs yet? By 4:00, you expect to see there are about 20 CVs probably in there. And like, should we interview one of them tomorrow? Have you got any time? We could interview, we can do it on Friday, and that kind of instant feedback and that kind of just getting on with things. And have you done, and why haven't you done it yet? We're in a hurry. Where suddenly you're in a big corporate environment, there's a system, there's an HR system, you have to log on, you have to learn how to use it. It's from about 1983 anyway, it's horrible. And then, you lose that reporter, and then you log on and it says, you've just come out of a meeting saying, with somebody who's a bit above you, saying, we're going to grow, you're going to grow, your target is to double in size every 5 years forever. And you go, okay, whatever, if we do it, that'll be good because I'll get a bonus. And you think, yeah, lovely. And then you log on to the HR system because you've just lost one of your reporters. And then suddenly you log in, you finally learn how to use it because you only use it once every 6 months or once a year or something. You don't lose people every day. And then it's all grayed out. And you go, well, where's the button that says hire or make this job go live or whatever it is? You put in all the details, and then it's grayed out, and then you're chatting to your own sort of divisional director or manager or whatever about it, and says, "Oh, well, Mark, didn't you know there's a hiring freeze?" It's like, no. So that kind of stuff. It's just that it's fine. You can kind of ignore it and rise above it. And you say, well, why? But obviously you can't have a hiring freeze. We're supposed to double in size every 5 years, and literally, that we're doing really well and we're making lots of profits for the group. So, and you want us to make more profit. So, that unfreeze it, please, and all that kind of silly stuff. And to sort of having that trust to be able to make sure that the person above you is going to keep the same profit promises that you've just made to everybody else, all that kind of stuff. One of those. So for me, it just wasn't really my thing. And of course, everything had moved on, and I'd had that benefit of being known and being visible, I suppose, as part the sort of the part of the insider that most people could say, oh, I know that guy. He's the guy who writes those editorial letters. He's probably on stage at the conference. He's the kind of visible face who could be sort of shot at, and you could put my face on the dartboard and throw darts at me if you like. If we'd just written something you didn't want to, we'd just published a story that you didn't want to come out. All that fun of, so for better or worse, I'd got a sort of brand name of being known, and then I thought, well, what have I got with that? I've got access to this industry. I understand the industry pretty well now after this time. And I know a lot of the people who run it. So why don't I do a podcast? Because also the Insurance Insider was all about subscription revenue, which is great. But podcasting isn't really about subscriptions. It's old fashioned. Old fashioned in the sense it's sponsorship and advertising. And so, which is kind of not necessarily flavor of the month. Obviously, it's a bit like recurring revenue. Everyone loves brokers because, you have 100 million book and you have a 93% renewal rate. So even if you don't do anything and kind of let it wither on the vine, it's still got another 10 years before it finally dies. And even then, it's probably still profitable. I mean, it's crazy. You let it wither all the way down to sort of 10 million a year, and you can still make profit as long as you quietly shrink as you do it, without actually doing any work. So, without doing any marketing or not winning any new business at all. Same with subscription revenue. Obviously, you've got a 90-something renewal rate. It's great, and so everyone loves that. You can kind of really, really build a business on that. And so the more frothy revenue, which comes from events or comes from advertising and subscription, non-subscription sponsorship, it's not as a pound of advertising is not as good as a pound of subscription revenue. They're not worth the same thing.
Did that change your approach to the kind of things that you want to report about? You're shorn of the shackles, right, of that growth imperative in some ways. Of course, you have to feed yourself, but notwithstanding that, you can talk about what you want and say what you want.
And also, I don't have to manage anyone. I don't have to manage one's up or down. Other than, obviously, everyone has to manage someone. I've got sponsorship. I've got a fantastic sponsor who's brilliant, and we've had a great relationship. And of course, I work for them effectively, don't I? Just like everybody works for somebody, even the biggest CEO in the world, they still work for. They've got investors, they've got shareholders. Yeah. Everybody's got somebody who they are answerable to. Very, very few people are the capitalist and
sovereign individual.
Yeah, because even Elon Musk, he's got shareholders, and if he floats SpaceX again, he's going to have shareholders, and he's got shareholders in Tesla. They may be happy or they may not be happy, but he's mostly autonomous. But even he has to answer to them ultimately, doesn't he? But here we go. So I thought, through the independent, seemed like the really right time to go and do it, and and podcasting didn't fit in with our revenue model. To say, well, why would we invest in that? Because, Mark, that's not a very good use of your time. The use of your time that's more profitable for the business is to try and ultimately drive more subscription revenue by making the Insurance Insider really good, and therefore more people subscribe, or they would pay more for that same subscription because we were giving them more value every year. We could increase it by more than inflation every year, and that would be good. But so it was very appealing just to go back to basics, and the fact, what's been liberating about the digital world is, 50 years ago you needed a printing press, and now you don't need a printing press. You don't need to pay someone. You don't have all that expensive printing. The cost of doing a podcast is it's not totally insignificant, but it's almost insignificant. It's a low cost business. I bought some microphones, but I'm a middle-aged man. I look after them. I've still got 4 microphones that cost me 400 quid. I've got a recorder. I've got, slightly more expensive subscription to, one of the online platforms that I can use for recording when I'm doing it online rather than face to face. And that's it. I've got my Oyster card. and I go into London and I've interviewed people.
Where do you see, but I'm interested, you said something there which is interesting, which is like, your previous management would have said, not sure about this, Mark, podcast, but you look at the way journalism's going now, right? And the way media is consumed, it's changed so much, right? And it's quite interesting because even some of the really great publications we're talking today don't necessarily have a YouTube presence or some of the other areas, but the world is going that way, right? The podcast that we've got here, there's more. What do you see with insurance?
Well, it's going to go the way of everything. Although there's nothing wrong with, well, online print, as we'll call it. Reading a story, the email alert is still the key. It's still the king. No one's killed email yet. If that was the thing that really helped the Insurance Insider, was when people had that email in their pocket it probably was a BlackBerry. That literally taking out everybody is, hey, have you seen this? Wow, I didn't know that. So-and-so's going to take over so-and-so, or this person's left. Why are they left? What are they going to do? Does that mean something for us? Is that valuable intelligence? I don't think nothing ever changes, and AI or whatever. None of these things are going to change journalism, because AI can't get a story off somebody because it's just going to do stuff that's on the record or things that already exist, or it can find insights within data that already is there, but it can't ask you to give you the data that's not in the data. The data that's not in the data is, yes, we're going to make a bid for Beasley. That is, and that level of trust that you could have with someone. Okay, that wasn't a scoop. That no one scooped that one. But that kind of level of trust that you would have with whoever that is, those sources at that very, very high level, you only have that level of trust if they absolutely know for 1,000% certain that you will never reveal who told. And how do you earn that? You earn that trust. That is an old-fashioned craft, as old as cavemen. I've heard this rumor, but is it true? And that is just it's absolutely 100% human thing that you can't change. And so journalism is always going to be here. It is an early profession, and now the medium, the great thing is that journalism is going to be everywhere. And it's so obvious what the difference between good journalism and bad journalism is. And it becomes more and more obvious because so much of it's just dross.
Yeah. And the thing about all of this, particularly in the digital age, is that you find out because people gravitate towards the good stuff and spend more time on it and read it, right? Maybe not always.
If it tells you something genuinely important that you didn't know, then that is the fundament. That's news. That's
Exactly.
real news
By definition. Yeah.
And then there's all the other stuff. But once you found the news and you've got that understanding of the insurance industry really deep, all the way through from the original policyholder, all with the regulator, with the rating agency, with the capital, the people who are investing in that insurance company, either lending them money or buying equity in that insurance company or reinsurance company or putting money in a sidecar. Who are these people and what do they want? And how does it all work? Once you think you know most of that, then it is a privileged position, because as you were saying, when you're a broker, when you're an underwriter, when you're in your position, when you're an actuary, you've got stuff. You've got your day job. You've got 43 renewals to do, and you need to get them done, otherwise you're going to get fired, or it's going to be a bad year, right? But of course, the job of a journalist is not to do the renewals; it's to sit above and ask everybody about how the renewals are going, and did somebody win this one, or did they lose that one, or does this account change hands, or tell me all about it, tell me what's going on, or who's on the hook for that loss, and who escaped, and who was lucky, who was a bit foolish, who's got a 5% market share but ended up with 25% of that loss. How did that happen? Well, because they reinsured everybody else, or something weird happened, or they weren't really looking, their aggregation was messed up. Somebody made a cock up, and they've been found out. So that's all the human side of things, and it's absolutely, it will never end. So, but anyway, a podcast is this podcast is. Obviously, there's so many different podcasts. It could be there's so many different formats that you could apply, and they could all apply to insurance. But I've got the format that I'm using is the most obvious one. Is let's talk to the most senior people in the industry and really get into the nitty gritty of what they've. Fine, obviously we have. It's more Parkinson than Paxman, because you can't really. It's very hard. An aggressive format doesn't really work, because I'd say if I ask them 20 things about the things they don't want to talk about, then why have you got a private jet? It's like, how can you justify that? when you're a public company. And it's like, well, I don't want to talk about that. So it would be a bit silly, and then they wouldn't come on the podcast. So we find the things that we can talk about, but because we've agreed to talk about them, we can really go into detail. And of course, because they know that generally I will understand the answer, and that will probably lead to an interesting third place. Or it's always the fun that where you actually add value in the podcast is where I obviously have to make assumptions about people. I think, you write this, so you must know that. And then they go, well, actually, we've stopped doing that. Or we are not going to do that way in the future. And it's like, wow, that's really interesting. I didn't know that. And we get to a third place, we get to find out things. Or I say, oh, so what? They spend 5 minutes explaining something really complicated. And then my job is to try and summarize that. And of course, by simplifying something, you can oversimplify it, and you're most likely to oversimplify it, and you get it slightly wrong. And they say, oh, it's just like that then. And they go, well, it's not really like that. It's actually more like this. And that's the point where I can imagine someone listening and saying, oh, well, I thought that too, but now I understand more about this company, and I really get it now because we've had to sort of interrogate it and say, what is it? And also, more importantly, what isn't it? We'll find out what it isn't as well.
That's very powerful. It's very powerful. When I this is a funny inside scoop on how HX works. But when I meet a CEO or someone, I use your podcast, right, to learn a little bit about them. And it's something you said there, which I think is really interesting, which is often the beautiful thing about a communicative medium like this is it is there. Oh, hold on a minute, that's actually not what I meant.
Yeah.
Right. Like it's those moments in a show that are very hard to simulate or synthesize in any other form of
it's
medium.
really difficult. For example, go to all the insurance markets websites, and it's really difficult to tell anything different about one over the other, because they're all going to say, we're really stable. Although for an insurance company, stable, strong, we do this, we're
That's
bold,
it, well rated,
we give you really good service, we really focus on the customer, whatever it is, they're all the same. And and look at our financial strength rating for our AA-, brilliant. But how can they differentiate? It's really, really hard. When you're talking to the people, you can tell they're all different, and you can tell they've got different focuses. So it really helps in that respect. So you can really 40 minutes with someone really kicking the tires, and it's always it's not the questions that I come up with. It's always the answers that then provoke more questions. That's right. That's the fun bit.
Yeah, exactly. It'd be remiss of me to not talk about technology, given this show is not the voice of insurance, it's the Underwriting Intelligence Podcast. You have had a front row seat over the last 20, 30 years, right, of the way the market has shifted. And your perspective, the helicopter view, I think is a really good, gives me a really good kind of landing place to ask you, jumping off place, to ask you about how you see technology. And if you were to give your honest view on the technology, how it's changed and figured in the mindsets of the leadership that you talk to, because I think it's something that you said a minute ago is very interesting, right? Because you go on an insurance company's website, pretty much all of them will say well capitalized, excellent service, international, experts. And now if you look on their websites, they'll probably also say technology, data, analytics. And I see when I talk to leaders, everyone writes it, but they don't all feel it. So I'm super interested in when you talk to people, like what you would say where the zeitgeist genuinely is today.
I'm really with you on that. So when I arrived on that in my office in 1992, there wasn't a computer on that desk. But the computer came in 1993. It was a green screen. It was IBM, and it was running Brokershaw, and it was in black and magic. And also we actually had a direct line to Madrid, so we had effectively email, but it was you could only email Madrid. There was our internal electronic messaging, so it's you didn't have to send them a fax anymore. That was really good. And then obviously your first renewal, the first one would be an input into Brokershaw. Before, you used to go to the renewal, you took a photocopy of last year's slip, you would Tipex out the bits, and then you'd give it to the typing pool to change it. So just 1993 to 1994, what else has changed? Some insured, and it's like that's it. And that's to give it to the people in the typing pool, and you get it back that afternoon, and here's my slip, and I can go to market. Whereas that first renewal where you could print it off yourself and said, right, I'm in a hurry, I'm going. Basic, really. So as a user, I could see the benefit. That was a massive benefit, and as management, they could see the benefit because they suddenly had management information about what was going on with the renewals without having to go do some manual trawl that would take about a week. So you could see, but back then I'd say there was still, let's say, the senior management did not see the value of the technology at all, and almost were anti it. So you could see when EPS, this was the earliest form of electronic placing. This is electronic placing support, very kind of late 90s. I was really into it, and I'd been on as a brokerage user, being young. I was got in to trial something. Their first electronic placing system was in beta in about 1997. Was called Broker 2000, and we were kind of trying to do electronic broking, and that was fascinating. And I was really, obviously, I'm of that generation. I was totally all for it. I wanted it, but I didn't know how it worked. That's the thing. So we've moved from a generation which didn't really want it to the generation that wants it, and now my generation's in power, shall we say? People who are over 50 are in power, where they are now likely to be CEOs of those businesses. They really want the technology. They absolutely love the benefits of it. But they also don't understand it. So they're not very good at implementing it. They know that it is a net good, but they can still be hoodwinked by someone coming to say, "Look, I've got all the answers," and they don't know. They can't tell the difference between one or another, frankly, and they can't tell good tech from bad tech, and they don't understand tech design. But the next generation, yeah, absolutely. So, and you can see it happening. All the broker facilities, some of the removal of friction from the market is really fantastic, and it's going really, really well. So, give it another generation. Because certainly there was a generation that wanted to kill that new technology because they thought that meant that it would end face-to-face discussions, and it's already proven. We all know that that's nonsense. Again, back for the same reason why journalism will always be a profession, broking and underwriting will always be a profession, because you need to talk about these things. You need to look at each other. You need to trust each other. You need to have someone. Also, you can have all the data, but there's never going to end that. When I was a broker, the classic, what does a London writer ask you if they trust you? They say, "Mark, what is it?" I mean, I know there's 27 pages of something here, but what can you just tell me what it is? And then I can tell you whether I'll do it or not. and so that's your broke. That's your 35 seconds you get to explain what the hell it is. So, but this is a really good risk. This is the biggest power generation company in Spain, and it's really excellent. So I think you should, from that basis, you should consider it. And it's highly profitable. It's been running for the last 10 years. Blah blah blah. But that is never going to end. That relationship, that ability, the AI might come up with a number, it might come up with things, but there's also going to be the broker around it. Everyone's going to know, because the broker's going to know if the underwriting AI is going to, if you come up with a risk that the AI doesn't like, even though it's a good risk, because there's something that AI flags up about it every time, you're going to still broker it, aren't you? You're going to have to broker it and say, I know the AI is going to tell you that this is a red flag, but this is why you should ignore the red flag here, because it's not a flag, it's a false flag. And, you can imagine all those discussions are just going to be ongoing forever. So, yeah, it'll be wonderful. I think everything's got much better. I'm very optimistic. I've always been optimistic about technology. I've been over-optimistic at different times. So certainly from an editorial perspective, I was always trying to get behind it, trying to promote it, trying to sort of support those that were trying to make it work, always, rather than being sort of saying, hey, this thing doesn't work. Because it's so easy. As a journalist, there is that asymmetrical trap. Obviously, one of the problems with journalism, of course, is that, train leaves on time, that happens 98% of the time. But when train doesn't leave on time, or train crashes into other train and 100 people die, that's really interesting, because it's not supposed to happen. That is news, you see. There's the difference between something being news and not being news. And so it means that there is a bias towards negative news. Company hires one person every day for 5 years is not the same as company makes 1,000 people redundant on one day. And of course, that company's still employing more people than it employed 3 years ago. So yeah, tricky, but but one thing is news and one thing is not news. And so it's as simple as that. So you do fall into that trap. I would try not to fall into that trap with technology, but then I fell into the trap of being over optimistic and pushing things that didn't quite work, that weren't executed in the right kind of way. So many false dawns. It's been painful, but I think we're really, touch wood, we're getting to a place where that technological base is going to be there. And let's see with this blueprint, the blueprint 2 really is the core, isn't it? If we can just get that right, and not take, again, we thought we could do it quicker and cheaper. And it's often in insurance, we beat ourselves up about technology and say, oh, we're not good at this. We don't get it, do we? And it's fair. We don't most of the time, but also we do ourselves down when we say, well, it's really simple. The stock market, that was 1986, the big bang, 87. That was the big, but one share of BP is the same as every other share of BP. And it's not fair to, one transaction in a bespoke insurance market is not the same as any other transaction in a bespoke syndicated insurance market. It's not the same thing. So I remember that there was a good anecdote back in the days of exchanging. I remember going for something that they were doing. It was around, anyway, they were replatforming something. And they brought in this guy externally and said, oh, it was probably ECF, the electronic claims form, a big deal at the time. And the guy had come in and said, you know what? People say it's just a glorified PDF. And actually, let's be fair, it really is actually a glorified PDF, and that's fine. But
okay,
you know how
right,
glorified this PDF is? To the point where Adobe, which own the PDF,
yes,
seconded 5 people to us for 6 months because they were freaking out. They'd never seen a PDF used for so much stuff because we were breaking that fundamental mold of the PDF to the point we were shaking the PDF to its absolute foundations and rocking it to its core because no one else. So we were doing ourselves down saying, oh, we're just insurance people, we don't know technology. But we were making the PDF do things that no one had ever asked a PDF to do, to the point where Adobe, that owns PDF, thought, wow, this is amazing. I've never seen anyone try and do anything like as complicated as this with a PDF.
Yeah.
So
yeah.
we do ourselves down, and it is often more complicated than we think it is. And again, so people come from outside, they think it's really easy, and then they get mired in how complicated it can be. And obviously there is that question of sometimes we deliberately make it more complicated than we need it to be. So the process itself might be designed the wrong way. But, that's a really difficult conundrum. Eventually, once you fully digitized, then it will sort itself out.
Yeah. And I think, something you said about, it's a very interesting, like generational macro level observation that every generation kind of axiomatically gets more tech savvy, right? By virtue of people growing up, as the world gets more technological, people grow up in it. But there's always a generation who is sufficiently senior and experienced enough to be a leader that hasn't grown up in the technology that's coming up today. So you get this kind of really interesting kind of dichotomy that I think you're going to simultaneously see people much more embracing of technology. And HX was born in that era, right? That point you said, I remember talking to Paul Brand from Convex. He gave me some very wonderful advice. He said, like, this is the first generation I've really seen where the leadership are like really embracers and not actually kind of skeptics of technology. Right? He's like the first time. But simultaneously, as you say, they aren't the people who are TikTok AI native, right? You're not. I spend my time trying to avoid as much of the TikTok world as I humanly can, although as much time in AI as I can. So that's a very interesting observation. Maybe one thing I'd love to ask you just before we wrap, one of the wonderful things you will get to see is you will have people, entrepreneurs, technologists who are very interested in the market, people like me and others, talking to you about AI, talking to you about the next generation of technology. Like, I suppose maybe if I ask like a very broad question, like, do you see anything new in the emergence of the new technology and the people that you engage with in the way they are and what they're bringing to the market? Or do you see it probably just being just a new phase of technology? Or is AI different?
No, I don't think AI is not different at all because it still it got to learn what the principles of insurance are, and they haven't changed. They can't change. The insurance has to be sustainable, and it has to be profitable, and you have to have, you've got to take everything into consideration. You've got to worry about accumulations and make sure you've got diversification without having made your whole book worse, of course, etc. It's got to have an eye on everything. It's got to think about capital. It's got to think about the availability of capital. It's got to think about liquidity. It's got to think about reserving risk. It's got to think about all sorts of things that it probably never thought about, that it wouldn't have thought about unless you start telling it about it. So it's got tons to learn. But the great thing is the friction. Removing friction from insurance is a wonderful thing. And so we will be surprised at the structures that will be able to exist. The automatic, I wonder if treaties will exist because they might not need to exist, because they're a very blunt instrument. In every broker's been to a situation where you set up a treaty for someone, and then about 5 months in, there's a kind of very sheepish conversation you have to have. It's like, that new line that with that massive support that we had,
we
haven't actually sold a single policy. I don't know what's gone wrong. And you have to go back and say, that minimum and deposit premium, could it be a sort of, deposit premium? And
Deposit
we have it
premium.
back.
Yes, I remember those M&D conversations.
And everyone's had that, again, so what a blunt instrument that is, ultimately. So, why don't you have why isn't everything always facultative all the time? Could you only buy it when you have a firm order? And it just goes ping, 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 and it's structured differently however you want it. So, you see, AI could really work for that. Going and syndicating, saying, I've just written 100 million line, go and place the 8/20. And literally just do it, and it's done. It's already done. And I already had a quote. I already knew what it was going to cost anyway, because I know exactly what's happening in the market all the time. So with no surprises, it was done. I didn't need a treaty, but maybe you probably still will have treaties, but they'll evolve. So there's the way that the insurance industry is going to structure is going to be really interesting. Obviously, we've got the broker facilities, we've got consortia. They're going to be much smarter, and things are going to assemble and reassemble and disassemble all the time in ways that are, incredibly quickly as well. You wonder again, and the cost of capital should come right down, because you're removing all the friction. So you can really see, particularly now, you're starting to see Lloyd's balance sheet being sort of, used by AIG to do its reinsurance. So that's wonderful. But why, at some point, are we going to have, Vantage, BlackRock? It is 20% of the capital of Lloyd's just going to be BlackRock Lloyd's fund number one. It could well be, or could it be 50% of Lloyd's capital? Because everyone uses it. It's just a pot of capital. Just dip in there whenever you want, and why shouldn't it be that? That was bound to be more efficient. If that's $1 trillion fund you can dip into any time you like, then that's got to be good for insurance, and that's got to be good for the London market ultimately. So, and if the idea that you can export the London market at the touch of a button, it doesn't mean that you don't. Just because you can do something direct doesn't mean you should. Because of course, you have to understand it, and you still need all that. You still need the broker there, and more than one broker probably in that chain to explain what the hell's going on. Because, it's just the classic. These things are never going to change. If you're a retail broker somewhere and you're doing a load of vanilla stuff, you do the employee benefits, you do the basic property, you do the motor fleet, you do all that stuff for your client, and then suddenly, and of course, it's always the moment they go, "Yippee! I've just bought a helicopter. I've been doing so well," and it's like, "Oh yeah, you're my broker. You can insure the helicopter," and you go, "Yeah, I can do that," and and then you phone up someone in New York, and it's like, "You're the helicopter guy, aren't you?" It's like, yeah, I can do that. We do that, but actually we send it to London, and it's going to, we'll get.
That's what London is.
Now it won't be so frictional. The answer will come much quicker, but it's still those routings will still need to be there, because there'll still be the specialist nature of that risk. You will need to know what the hell you're talking about when you talk, to actually be able to tell that client what they need to do with that helicopter, and what they use that helicopter for is really important. And what kind of engine it's got, and who's driving it, and how many hours have they got on that make and model. It's all that stuff is still absolutely pertinent, and to know why you need to know all this stuff is still really important. And again, so there's still that the human relationship side of it, back to that original client, is still massively important. So and again, because the reason why you have wholesale is because that retail broker only has one hot helicopter in a blue moon.
Yeah.
Because you can insure it, or fish farms, or any of these really specialist things. And now we're going to, the world is. We're talking about. I was talking to someone who's going to be insuring manufacturing things in space. I think, well, that's a bit of a small book at the moment, but it's probably going to grow. So again, there's always going to be something that's naturally suited to the London market.
I totally agree. I think we could do a whole nother episode on the opportunities for the market that AI creates, right? Which I think could be a very interesting one. Because you're absolutely right. But I think, the way you framed it, of like lots and lots to learn, much more calibration, but definitely more opportunity to improve friction, is very much how we see it, right? It's the very beginning. I always describe AI, I probably said it on this show, that it's like the internet in 1996, right? Like that's where we are today. And if you look at the world that we live in today compared to how people thought the internet was, maybe when you were just about doing web space, back then. It's kind of inconceivably different, right? And I think that's the exciting thing, opportunity ahead for us. Well, that's a great place to end it. Mark, thank you so much for coming on the show. This has been a special episode for me. I'm very excited to come back on your show and maybe to talk a little bit about the other side of things. But thanks for giving us the insider view to you. I think there'll be lots of people super interested to hear a little bit about you. You're on the other side of the microphone. You do a wonderful job. But I think this is going to be a wonderful episode for many of our listeners. So thanks for coming.
Well, yes, but all you need to know about me is I probably talk too much. So there you are.
Good skills for a podcaster.
No, and I really want to get you back on the show, Amrit, because you've got. I mean, it was about 3 years ago. So your business is really, I don't know, 5 times bigger by now. And it's probably developed a huge amount. And obviously AI has really kicked off since then as well. So yeah, there's tons to talk about.
Good. Wonderful. Thank you.
Thanks a lot.
That's it for this episode of the Underwriting Intelligence Podcast. I hope you found it useful and thought-provoking. If you did, don't forget to follow or subscribe wherever you get your podcasts. And if you know someone in insurance who'd find this valuable, please share it with them. I'm Amrit, and I'll be back in 2 weeks with more insights that matter in the insurance world. Until then, thanks for listening.